Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is December 17th, free edition of Market Outlook. So, quite the market tear we've been on, and let's get into the details and just see how we're setting up right now. So, first of all, just taking a look at our risk on, risk off gauges, you can see that we're in a pretty robust situation right now. We're in positive zone here. We've been that way for a couple of weeks, and we definitely improved from a month ago. So overall, things have stayed consistently positive regarding our risk off, risk on gauges, which we'll get into in a little bit more detail in just a moment. So taking a look at the overall trends, just a couple things to note. First of all, the Dow, as you can see, the big outperformer. At the moment, our real motion indicator right now is sitting at a reading of plus 12. So that is a definite leadership. The others at 8, 10. So the NASDAQ 100 is the second strongest in terms of absolute momentum. And again, you can see just going back, again, several months, about 5 or 6 months, we are strongly in positive territory on a relative basis since the early summer. And in terms of the S&P, you can see we're just sort of matching similar levels. So in essence, the Dow is showing absolute leadership. Now, the other thing to note is that we do have an inside day pattern in the Dow as well. So that is something that's definitely tradable. So a breakdown beneath the 10-day moving average and a failure of that inside day pattern would put us on the defensive short term. Conversely, a breakout above the high of Thursday would really propel this and accelerate the overall situation in the Dow to the upside. If we take a look at the weekly charts, you've got a similar scenario. And again, just looking at the relative absolute reading on momentum, you can see just where we are right here in the Dow. And that is absolutely the strongest reading, right? This is going back to mid-2015. You can see that this index is strongly above in terms of our real motion indicators. You don't have nearly the strength in IWM. In fact, that's sort of the weak link at the moment. Not too bad in the Qs. It's pretty good absolute reading. And in fact, what you can see is our 50-week of real motion now really starting to accelerate, and that's a real positive sign. If it can break above the 200-week, that would be showing fresh acceleration to the upside. But net, you cannot argue about the overall absolute trend on a weekly basis or even on a daily basis in all the indices. Even IWM, as you can see, trend, it's trading above the short-term moving average. The 50-week is nicely above the 200 with good separation. Overall, markets are in gear. You can't argue with this whatsoever. All right, so now let's take a look at SPY versus utilities. This is one of the key intermarket relationships, and this is also indicative. What's interesting is actually utilities are starting to break down a little bit and not really impacting the S&P, and our risk on, risk off reading here is showing that the S&P accelerating to the upside, just getting stronger. That's a positive. Now, in terms of our other key ratios, in the The only one that's showing signs of weakness is high yield debt compared to bonds. Normally, we like to see the riskier high yield debt outperforming the US bonds. That is not the case. So that is the only indicator right now that's showing any weakness. So the majority of our risk-on indicators positive, hence you can see where we are overall positive. Now, in the sectors, what you have is also more confirmation of the overall trend, which is pointing up, because semiconductors, which had been under pressure, it was one of the strongest performing groups or sectors for the week. That was up 1.3%, outperforming the Dow. Also, technology, just in general, up 1.5%. As you could see in a moment, the NASDAQ 100 performed quite well this week as well. Now, the other thing is that the utilities, as you can see, actually down on the week. So with semiconductors regaining leadership along with technology stocks and utilities weakening, that is definitely confirming more speculative interest and buying in stocks in general. Volume analysis also confirming the overall trend as it accelerates to the upside. So what's interesting, I had pointed out a couple of weeks ago that there was some concern because there were a lot more distribution days. So now, over the last couple of weeks, you can see accumulation definitely outperforming any of the distribution days or outnumbering. That's a positive sign. So net market is definitely looking at the fact that it has been gaining buyers, and aggressively so, because accumulation days mean that on an up day there's greater volume than the prior day. So that shows you good institutional type accumulation. Now, finally, in this free section, we're going to go into market hotspots. What is also interesting here is that copper, which had been very, very strong and actually sort of retreated, regained, and had a very strong week. So copper is generally considered a good lead indicator of economic activity, and that is certainly confirming. So obviously copper used in housing. Housing has been pretty strong, or home building. So this is a definite positive sign here. Copper regaining its leadership. Now, the other thing to note is copper, a commodity, doing well. However, commodities in general have been doing poorly, especially the softs. So there you can see here coffee for the week down 2%, corn down as well, natural gas down. So the issue here is commodities not doing all that well, with the exception of the industrial metal copper, a good sign for economic growth. So again, overall, you can see markets looking like they're in gear, trend intact, and nothing of real concern here at the moment. All right, that's it for the free section. We're going to cover in a lot more detail some of the charts in copper as one of the highlights. So again, good luck with your trading. See you next week, and bye for now.